Hi, in this class we may see about the introduction of financial accounting. There are three branches in accounting, that is financial accounting, cost accounting and management accounting. In this class we may see about financial accounting. Meaning, accounting is a process of identifying, recording, summarizing, and reporting the economic information to decision makers in the form of financial statements, namely trial balance, trading profit and loss account, and balance sheet. Definition: according to American Institute of Certified Public Accountants, accounting is an art of recording, classifying, and summarizing in a significant manner and in terms of money transactions and events which are in part at least of a financial character and interpreting the results thereof. From the definition, we may know the features of accounting. That is, the accounting is the art of recording business transactions. In every business, there may be so much of transactions every day. We can't save in our mind, so it should be recorded in a book. Then it is the art of classifying the recorded business transactions under the same group. Then the transactions and events must be recorded in monetary transactions and events, that is, the which can be expressed in terms of money only can be recorded in the books. Then it is the art of summarizing financial transactions. It is the art of analysis and interpretation of these transactions. Then the results of these transactions must be communicated to the concerned persons who need that details. Then functions of accounting. The functions of accounting are recording, classifying, summarizing, deal with financial transactions, interpretation, communicating. We may see one by one. First one, recording. It is the basic function of accounting. All the business transactions in the financial character are recorded in an orderly manner. Recording done in the books is called journal. It is the first step. All the transactions should be recorded in the book. So after completing the transaction, we should record the transaction. It is in the form of journal. Then classifying. It is systematic analysis of the recorded data with a view to group in same nature. The work of classification is called ledger. Then summarizing. This involves presenting the classified data in understandable manner to the users. This process leads to the preparation of the statements, namely trial balance, trading account, profit and loss account, and balance sheet. Then the account deal with financial transactions, that is, the transactions which can be expressed in terms of money only can be recorded. Then analysis and interpretation. The recorded financial data is analyzed and interpreted in a manner that the end users can make a meaningful judgment about the financial condition and profitability of the business operations. Then last one, communicating. Communicate the results of the business to the users. The next, objectives of accounting. First objective is to maintain a systematic records of the business. As there is accounting standards, to maintain the systematic records. Then to ascertain profit or loss of the business during a particular period of time. If we record the transactions, then only we may know that if there is a profit or loss during a particular period of time. Then third one is to ascertain the financial position of the concern, that is nature and value of the asset, then nature and extent of liabilities. From preparing the balance sheet, we may know the financial position of the concern. Then the last objective is to facilitate rational decision making, to make information available to various groups and users at a particular time to facilitate rational decision making. Next, uses of accounting. If we record all the transactions in a book, then we can ascertain the operation, profit or loss during a period of time. Then, ascertaining the financial position of the business. We may know the financial position of the business from the balance sheet of the concern. Then, keeping systematic records. The next use is protecting and controlling business properties. If we maintain proper records, then only we can protect and control the business properties. Next, facilitating rational decision making, like either to continue the same policy or if there any change, is there any need to change the policy, etc. Then planning and control the operations of the business. Next, compliance with the legal requirements. If we maintain proper records of books, it is useful as legal requirements. Then making information available to various groups and users at a particular time. Then the accounts can be used as evidence in the court if there is any dispute. Then it is substitute of memory. That is, as human being, we can't save so much of transactions in our mind. So instead of that, we may record in a book. So it is useful. Then settlement of taxation liability. The accounting can be used in taxation. Then comparative study. If we maintain proper records, we may compare our business performance with others, or we may inside the business we may compare our business performance in the previous year with the current year. So then sale of business. If we record all the transactions and if we prepare the profit and loss account and balance sheet, we may take decision regarding either to continue the business or to quit the business. Then the amount, size and causes of increase or decrease of capital. So to either to increase the capital or decrease the capital, is there any need to increase or decrease the capital, we may decide according to the accounting. Limitations of accounting. Accounting records all the monetary terms only. It does not record the non-monetary items such as the employee's skill, performance, talents, etc. So it records only the monetary transactions, that is, which can be expressed in terms of money. Then effects of price level. Accounting is not considered because we can't control the price based on the accounts. Then no realistic information due to the concepts and conventions we followed in the accounts. Then Personal bias of accountant affects the accounting statements. The accounting statements can be true if the accountant have full knowledge of accounting. Then it permits alternative treatment. So there is no uniformity in accounting principles. Then no real test of managerial performance as it can be manipulated. The accounts can be manipulated as convenient to the owners or business. So there is no real test of managerial performance. We cannot judge on the basis of we cannot judge the performance of the business on the basis of the accounting. Then historical, it is historical in nature because it records all the past transactions. After completing the transactions, we record the transactions in the book. So it is historical in nature. It is not useful in future. Then not helpful in price fixation. Then cost control not possible. On the basis of the accounting, we can't control the price because it records the past data only. It is historical in nature, so cost control is not possible. Then it is technical subject. Only the persons who having the accounting knowledge can only record the transactions or keeping the records. Thank you.